Hello and welcome to the third season of CNBC-TV18.com presents The Making in association with HSBC. Now, today's episode focuses on inclusive banking and microfinance and the role that they play as enablers in sustainable and inclusive India. Now, 7 of the 17 SDGs highlight financial inclusion as a key enabler to alleviating poverty and driving sustainability. Facilitating access to financial services and products for the underserved is imperative to curb inequalities and build more resilient societies. Microfinance or microcredit is one of the economic tools that provides small loans and other financial services to low-income households. Indian MFI has witnessed a phenomenal growth over the past 2 decades despite several disruptions. Now, today, microcredit is delivered through 197 lenders, disbursing around 2.3 lakh crore rupees to beneficiaries spread across 628 districts across 37 states and union territories. Given that MFI is the harbinger of inclusive and sustainable growth, supporting the growth of these institutions is of paramount importance for India. For financial investments, conducive regulatory framework, and infrastructure development are 3 enablers that guarantee the expansion and the sustenance of the microfinance landscape. Well, to talk more about the drivers of inclusive banking in India, we have the key stakeholders themselves. Joining me for this very important conversation today, Rajat Verma, the Managing Director and Head Commercial Banking at HSBC India, Umesh Revankar, CEO and MD at Shriram Transport Finance, Uday Kumar Heber, the Managing Director and Chief Executive Officer at CA Grameen. Gentlemen, thanks very much for joining us here on this conversation. Let me start with you, Mr. Heber. As I pointed out, the microfinance story in India is not new. It has been an almost 2-decade-long journey, and it's been a journey that has seen many developments, many twists and turns. As you stand in 2022 today and look at the way the landscape has evolved, has changed, the consolidation that's taken place within this space, take us through the journey so far, but more importantly, what the runway ahead looks like.
Yeah, I think, thank you. Pleasure to be here, Shirin. Microfinance has been here since last 2 decades. And as a basic business model, this worked as a social business, providing credit to the bottom of pyramid through doorstep delivery process. It has been a great journey in the last 2 decades, but particularly in the last 1 decade after regulator intervened and started getting into building a proper regulation. Probably India is today one among the best facilitator for the microfinance business, with credit bureau in place, regulation in place, lending mechanism through PSL lending is in place, and then the self-regulatory body in place. I think nowhere in the world this kind of facilitation is available for microfinance business. There's probably today, market leader in terms of microfinance in India, with 3 trillion rupee in terms of sector AUM. So I think it's one of the best. So over the years, again, regulator facilitated the MFIs to become banks. 9 of them become banks, 1 become universal bank. I think this kind of facilitation is not there. Top of that, looking at the maturity of the business, regulator came back and again and given more flexibility today with the new regulation, which is again plus point for microfinance, playing as a one common business for every player. I think this kind of facilitation, this kind of infrastructure and support system probably helped this to grow as a mature industry today, and there's a huge highway to grow, considering that almost 160 million households are underserved or unserved by the banking, and only 60 million of them are accessing microfinance today. That means 90 to 100 million of households which are low income, lack of access to credit, are yet to get the credit. That itself creates a huge runway for this microfinance business, owing to the nature of this business and non-availability of form of finance in the rural India. I think rural India is a bet for microfinance, and definitely there's a large, huge highway and a huge potential for this business.
Well, speaking of that highway, Mr. Heber, and it's important that you highlight the many regulatory changes that have come in, and you believe that the environment is much more supportive now of microfinance institutions like yours. But, I just want to pick up on the highway to growth aspect and talk to you a little bit about what that means specifically as far as your company is concerned. Let's talk about business momentum, for instance. Customer base for you at 0.38 crore, that's up a little over 1% year on year, almost 3% quarter on quarter. It's the first time that you've seen year-on-year growth in 6 quarters. So I want to understand from you what the business momentum in the near term looks like for you at this point in time.
I agree. Even though you saw 3% or 1% growth, it's basically a pre-write-off because of the COVID. There's some kind of write-offs of customers impacted the year-on-year growth. Otherwise, if you look at the pre-write-off growth, we're at 14% YOY growth in terms of customers, which is phenomenal. So, and we are seeing that kind of growth. Even the Q2, we added almost 2.8 lakh new customers. It's again one of the highest in any quarters in the last many years. So, and we are seeing that kind of pent-up demand and the ability to work in rural and the ability to expand the footprints. We added almost 500 branches in the last 3 years, which are not fully utilized in the last 2 years of COVID time. So therefore, huge infrastructure available for growth. Therefore, we believe adding 100,000 customers every month is the potential today, and we are doing that, which means we will be able to grow almost 12 to 14% customer base and about 24-25% AUM base going forward here onwards. That's the potential, not only for Grameen, it's also for sector, I believe.
Yeah, that is the potential as per, you for the MFI sector and, of course, specifically for Grameen. But Mr. Revankar, let me address that issue with you as well. Challenges that the sector has had to overcome. It is poised for further growth, and as per Mr. Heber, poised for significant growth from where we currently find ourselves. I want to understand from you what has been the perspective that you have adopted, and more importantly, from a future standpoint, to support the enablers that we just spoke of. What's your outlook as far as the MFI space is concerned, and the challenge of bridging the access deficit of serving the underserved?
Yeah, thank you, Sharon. See, basically what happens is a customer or a entrepreneur or an individual, when he wants to make a sustainable income, he has a different business models he adopts. It could be a shop, it could be a vegetable, it could be a fruit vendor, or it could be acquisition of a particular business activity, or maybe asset. Now, what we have done is focus on acquisition of assets. Initially, it is a vehicle, then tractor, or it could be a construction equipment. All these equipments or vehicles require some kind of a skill sets to be developed initially to operate these machinery or vehicles. Once he understands how to operate, then there is a income generated out of these vehicles or machinery, or even a business or shop. So once a sustainable income is established, then it is easy for a person or family to grow their business. They can add more equipment, they can add more businesses around their known skills, what they have built. So it gives them a long-term sustainable income. So not only the person who starts the business, it is the peer pressure that creates a bigger sustainable income for the entire family. So I feel over the 20-25 years, as the rural and semi-urban and urban has got integrated because of the better road work, a better road network, and a better commerce between these cities, there has been a flow of business move. People also have been migrating from one place to another place. There has been a sustainable business that creates momentum.
You're talking about this virtuous cycle, Mr. Revankar, and I just want to understand from you what we can expect in terms of future enablers, specifically from Sriram. You launched the social finance framework. You've invested almost $500 million in improving access to finance to underserved communities. Now, take us through what the impact has been, for instance, of this, and what more we can now expect in the future.
See, most of this business are sustainable businesses for a long term. For example, people who have been operating a tractor, today he is able to operate a backhoe loader because these equipments are now getting used for agricultural portion also. So, see, as these kind of skill sets gets developed, more equipments are being used, then automatically the ability for a customer to expand his business and access to a bigger credit or bigger equipment increases. So we have seen that there is a continuous development once there is an initial acquisition of an asset. So whether it's a rural or semi-urban area, I feel this kind of a inclusion of people into the business will hopefully will expand their horizon, and people will manage themselves and their businesses in a more sustainable way.
Yeah, Rajat, I want you to build on what we just heard there from both Mr. Revankar as well as Mr. Heber. The impact of a deeper penetration of microfinance, of microcredit, as well as the highway for growth that both of them have spoken of. One of the key enablers has, of course, been the digital infrastructure, which has made a lot of this possible now, which has really bolstered the inclusion, the financial inclusion story. How are you reading this 2-decade-long journey? And more importantly, what lies ahead?
Thank you, Shireen. You're absolutely right. In fact, microfinance, I would trace it back to Seva Bank and Ila Ben back in 1983, I think it was. So clearly it's come a long way, and the last decade have been very important for it. But, obviously technology has had a really important part to play in the growth in the recent past, as has the Credit Bureau and the organization of the industry, the regulatory framework and all of that. But I think looking forward, some of the building blocks for the stack are already there.
Yeah.
But you need to develop that stack into something different, in the sense that a lot of information that you could get for a MSME, perhaps, which can work with OCEN, may or may not work with microfinance, because the level of information that you might have available that you can take a decision on will perhaps be insufficient to be more knowledgeable about that client. So I think to some extent, the question that you raised of Udaya, and Udaya, I mean, my view is that outside in, Udaya is the expert on this, is that this is a social business. He used the term social business, right? So ultimately, this industry will be gauged not only by the financial success that it gets and the strength, etc., that it grows, but whether the 6 crore individual borrowers in microfinance become 12 crores or 18 crores, and that's when the coverage will happen. And to some extent, whilst the building blocks of UPI, etc., are there, I think it, in some ways, you do need a reinvention of technology, of the way that credit can be delivered. Because intuitively, I feel that some of the benefits, the first order benefits, maybe even the second order benefits of all the steps that we've mentioned several times before, may have already come. So I'm really happy to hear Udaya say that 14% customer growth can happen for the next 3 or 4 or 5 years. But at some point, you reach a point where it gets more difficult. The distribution becomes more difficult. So clearly, technology will have to evolve with that, Shireen. So if you think of it 5 or 6 years back, I think the technology that we use today to open accounts, to deliver loans, to collect cash is unthinkable. It's unimaginable, the level of frictional costs that have been saved and the efficiency that has been brought in. But you need further evolution of that technology for it to reach the even more difficult portion of the population that is so required.
That's an important point that you make, and let me get Mr. Heber as well as Mr. Revankar to comment on that. And Mr. Heber, as Rajat pointed out, perhaps the way that technology has been leveraged for now seems to have served its purpose, seems to have served its benefits, but much more needs to be done. Now, when we talk about reimagination or reinvention, what does that mean specifically for a business like yours at this point in time? You talked about the significant headroom for further growth, but are you changing anything on the back end to be able to service the front end? What are you doing differently in terms of developing or deploying technology to really achieve the kind of growth numbers, the growth targets that you just articulated?
Absolutely, it is very, very important to be, technologically advanced all the time. Probably Grameen believed that is most important. Probably in the entire microfinance sector, we are the only adopted core banking in 2015 itself, which helped us to grow. One side is a growth potential to absorb, as well as made it more efficient in terms of the processes, data management, decision making, and the speed of transactions. Today we are handling almost 1.5 million transactions per day. Just because of core banking in place, we are able to manage many of these elements in a far better than many of us in the industry. So probably that helped us in building our backbone for the future. For example, last 1.5 to 2 years, almost 20 lakh customers' data acquired digitally. So the entire customer's data points or a center points, and the entire thing is end-to-end digitized. So loan decision can be made in seconds rather than days, which was earlier 5 years back. And this is an important step for us for growth. This is a building block, definitely. As Rajesh said, it's very important to be competitive in terms of the business model, in terms of technology, in terms of process, and in terms of efficiency, which is most important. Irrespective, in 5 years' time, you acquired all customers and there is a competitive edge, you should be ahead of it. That is what we do. I think a sector is working on that in that lines.
Mr. Ravankar, I want you to take up from where we just left the conversation with Rajat and Mr. Heber. And again, I'm just taking a look at the numbers. It's been a superb quarter for you, the highest ever quarterly disbursals at 17,769 crores, up almost 20% year on year, almost 7% quarter on quarter. AUM growth is the best that you've seen in 15 quarters on a year on year basis. Since we are talking about future growth potential, and Mr. Heber just alluded to the changes that are likely to happen both on the product side and the solutions perspective as well, what kind of reimagination should we expect from you to try and grow this further?
See, basically, we have microfinance lending and individual, they're borrowing for buying some assets or equipment. These people, over the period, become micro enterprises or maybe proper SME enterprises. That's one way to go. And the second way to go is more people coming in the bottom line, to be an individual entrepreneur or to start a business. So as the current people progress and become larger, there are a large number of new people who will be joining. So that's how this will become a sustainable momentum. The digital part of it is helping people to innovate themselves and improve their efficiency. For example, if you take Ola and Uber as an example, an aggregator model is giving only technology. The individual as a vehicle owner or driver, it has helped him to source business better, keep his accounts better, and manage it more efficiently. So I feel the technology is today getting developed, whether it is a truck operator or whether it is an agriculture farmer or whether it is a businessman or a passenger transportation. Everywhere technology is helping for people to become more efficient, and this efficiency is driving a better margins or better utilization of their resources. I think ultimately that will help the society at the bottom level, because what happens is government cannot provide a sustainable income model for so many people. It is the society has to transform itself and find a way to build their own business model and engage the business. So I think In that way, technology is actually democratizing credit in a much faster and better way, giving people options, giving people the knowledge, and also a speed of delivery.
Yes, you're right in pointing out that we have seen that democratization take place. Of course, there's a long distance yet to cover. But Rajat, I want to understand from you, from a bank's perspective like yours, what more can you do? You've got a partnership, for instance, with ADB. How do you support the on-lending finances of this sector? What's the role that you believe that commercial banks like yours can play in this space, in this sector?
I think this is a money business, Shireen. So fundamentally, we've worked with both the gentlemen on the screen for more than a decade now. And as a foreign bank in this country, our branch distribution wouldn't allow us to do the things that they are able to do. Financial inclusion is an important objective for us as well. But the best way, the most sensible, the smartest way for us to achieve that is through the people who are most bring it to the segment of society. So I can recollect going back more than a decade that we started to do not only on lending, but we started to purchase portfolios from Shriram, for instance. The other opportunities that we saw was to diversify. See, given that it's a money business, you have to diversify your source of funds, which was primarily Indian commercial banks. And with many companies in this industry, our pitch has been that, look, you must go overseas. Doesn't matter if the cost is plus or minus 50 basis points. You have to diversify because this is your raw material, right? It's just technology and money and your mind power that will drive these. And I don't know in which order you want to put them. In certain times like COVID, you probably put money, the funding or liquidity ahead of all other things. So it's really important to diversify the sources of capital. And, Uday has announced a recent transaction with a DFI for very long-term funding. And Umesh has done several such transactions in the past. So those are very important things that banks need to work with this industry to be able to deliver. So, of course, it's your own balance sheet, but it's also the partnership to be able to find other pools of capital. Because at the end of the day, capital is not infinite. It has various means of getting deployed. And it's certainly not surplus in this industry. And this industry it's growing so fast that it is burning so much of capital. I mean, you see that every time I see the capital adequacy of a microfinance company goes to 30 and comes down to 20 within the year. So again, they need capital. So banks have a really important role to be not just lenders, but to be partners in this growth. And of course, then there's this other angle of transaction banking and supporting sort of the collection and the payments, which we do as well. So that increasingly is an important role that we play with this industry as well.
Yes, the need for capital is well articulated there, Rajat. But Mr. Herbert, let me come back to you now. And I want to understand from you what the future looks like in terms of the kind of products or solutions that one can expect. I mean, things like gold loans, reprioritization as far as the retail finance segment is concerned. Give me a sense of what we are likely to see change in the mix going forward.
Yeah, sure. I think, it's important to keep working or keep following the customer's needs in this business, because this is an unsecured collection, unsecured business, but we believe this is a collection business. Therefore, we need to maintain relationship with the customers and follow their needs continuously. So the retail finance is basically the follow-up of the customers who can become an entrepreneur over a period of time. If we start the journey, the new customer starts the group model, deriving the benefit of social collateral so that they can access the form of finance. Over a period of time, with the financial literacy and ability to raise funds on behalf of their own business, actually they become CFOs of the business. Today, I can proudly say I have 40 lakh CFOs and women CFOs who run their businesses. They raise funds, they manage funds, they manage businesses, and then they ensure that the repayment is made, and then keep enhancing their businesses. There's nothing but the CFOs, right? So once they become CFOs, they start enhancing their business, and then they need more money than the microfinance. That is where the retail finance comes into picture, where they will access the other finance. Maybe they will buy a tractor from Sriram tomorrow, for example, because their ability to enhance their businesses. That is where we need to follow their businesses and facilitate the future requirements. That is why we moved from microfinance to retail finance for the customer who have a stable business and stable cash flow. So that there it can be a loan against property, it could be a business loans without security, with security, improvement of home, education loan. These are all the common products which require for every customers whose journey starts from a low income household and eventually aspiring to educate their kids and having their home and build their business and becoming entrepreneurs. So we are working on such product to facilitate them to become a microfinance borrower to a woman entrepreneur.
Well,
Shireen, if I may just ask Udaya a question. Sorry to interrupt you. I've always been I think I know the reasons, but I'd love to hear from you. Why hasn't urban microfinance really taken off, given that 40 to 50% of the population stays in urban or semi-urban places?
Maybe I have some answers from my side. Probably may not convince you, because we took a decision a couple of years back not to work in urban. But we felt that there's enough supply of money through different lenders, and you have inability to assess the formal and informal finance borrowing from customers in the urban. Therefore, we took a decision not to operate in urban. So that actually a lot of time it validated the delinquency levels in urban and then the difficulty faced by the lenders in the urban, which validated multiple times. But there is enough formal suppliers available in urban. Whereas in rural, when you move, there is no formal lenders available. That is where the story of microfinance need to grow there. That is why we took decision to grow more in rural. Penetrate deep, go to hinterland, make the successful business model in that hinterland. So that worked for us forever, all these years. And we believe that the future also, to large extent, when I said 100 million low-income households yet to get formal finance, at least 75% of them are in rural, not in urban. So therefore, my strong belief is that the growth potential for microfinance in rural and not in urban.
I'm convinced with that answer. I don't know about you, Rajat, but I think that makes sense. Why they've chosen to stick with rural India as opposed to try to service urban India, where there are already, as he said, players trying to grab that customer. But Mr. Revankar, I want to understand from you the same question. What the focus is likely to be going forward as far as you're concerned. Where you believe the opportunity lies in terms of servicing the unserviced segments of the market. I mean, your AUM growth has largely been led by the used CV space. That's seen an increase of almost 14% year on year. How do you see your solution mix change?
The one development is in the last 3 years, if you look at the cost of acquisition also has gone up. So naturally, you will get a bigger ticket lending, because the technology, there is improvement in technology, and India also has moved from BS4 to BS6, and therefore there is a better technology on the vehicle. Emission norms are much stricter, and the quality of the vehicle and the equipment is changing. So automatically you get growth. So getting a growth is not a very difficult job, but the acquiring new customers all the time and getting into new geography, new area, that is very important. And also, as you rightly put it, some new businesses. So as we are now in the cusp of a merger between Shriram Transport and Shriram City Union, Shriram City Union is into the business of lending into SME, and they're into gold finance and two-wheeler financing and personal finance. So we cover most of the financial need of, especially in the rural and semi-urban area. We are also not very big in the urban. When I say urban, the tier 1 town and metros, we are not really big. we feel that the option for the customer is already available. So multi options are available. Banks also have reach there. Cooperative banks are there. So I think the option being available there, we focus on mostly semi-urban and rural area. That's where the reach is still less, and usage of digital, even though because of Jam, Trinity, people have opened account through Aadhaar. People are not still using the bank for total transaction per se. For receiving some amount or receiving some subsidy, they may have a bank account. But for making a transaction, still the accounts are not fully utilized. I understand nearly one third of the Aadhaar-based accounts are almost dormant after opening the account, mainly because the transactions are not routed through that. So it will take some more time, for at least maybe another 10 years, for that kind to trickle down into each of the household, every transaction, financial transaction, to go through the bank account.
Well, Rajat, they're both leaving the urban space for you, so making life easier for you. But I want to understand from each one of you how you're trying to build in resilience into your business model, given the fact that we are living in uncertain times. In terms of the many regulatory risks and regulatory challenges, as well as the political risks associated with the microfinance business in India, those have reduced over the years. But at this point in time, given the opportunities that you see, the growth aspirations that you have, Mr. Hebar, I'll start by asking you, how are you building in resilience to deal with the downturns, to deal with the uncertainties?
Yes, absolutely. This is very, very important. Probably we demonstrated it multiple times, despite there are many difficult situations we faced in the last couple of years. The clear way, one is having the loyalty of the customers, most important in this business, as well as the employee centricity and an employee loyalty to build, which is most important to manage the uncertainties. Why? Because once you have a right product suitable to customer, process suitable to customer, as well as pricing suitability, customer will stay with you. Longer the customer stay with you, will build the loyalty, and they prefer you to do transactions. So today we are able to, in the last 6 years continuously, we're able to retain 85% of our customer, which is the maximum highest in this industry. Similarly, our growth comes, at least 60 to 65% of our growth comes from our existing customer, which means I grow 65% of my portfolio without having acquisition cost. So which reduces my cost of operation, which reduces my risk to customer, which increases the revenue per customer. So which makes a very resilient business model for me. Similarly, from the asset side, similarly the employee side, you need to have a right kind of employees to serve this kind of customers, align with the ethos of the company. Therefore, we hire only freshers and train them to the need for our needs. So that for almost 97% of our employees, we are the first employer. We recruit freshers, recruit from rural, recruit from the customer segment, their own family members, and then train them. They're able to empathize well with the customers because they come from the same set of families. So now, which helped us to build the typical empathy to our customers, and then work with them to ensure the resilient factor. And the third important factor is the resiliency in our liabilities. You need to have a right liability, diversified, stable, long-term, and then positive ALM. This is very, very important. Banks like HSBC or many of the international banks helping us to diversify our funds beyond borders, not just in India. Almost 10 to 12% of our funds are in outside India, which we are planning to take it to 20-30% in the next 2-3 years, which will help us to diversification of the stable funds. Having the right mix of the liability and the right mix of the asset, which actually makes us more sustainable and resilient.
Mr. Revankar, the top 3 things that you are doing to build in resilience?
Yeah, I think I'll allude to what Mr. Hebar has already said. It's building when you recruit people, making them part of the culture, because you have a culture in our nation. We are a 4-decade-old company, and the second thing is understanding the community which they are serving, because most of these businesses, whether it's a farmer or commercial vehicle owner, they're all in a difficult, tough businesses. So understanding them, dealing with them, and empathizing with them, that's very, very important to be successful in the collection or building a long-term, long-lasting relationship. So we give focus on the training and skill sets that's required to build business for, that's one. And on the technology part, we are always focused in the sense we want the customer to be on par with us as far as technology is concerned. If I'm able to get a customer introduced into digital mode through mobile or through some internet access, then it is more convenient for the customer and for us both to reduce the time taken to complete a transaction or even a remote transaction. So we are trying to bring the customer on digital mode as much as possible. Much before the demonetization, we had the option of the customer to pay through digital mode, and that's how we have now nearly 40% of our customer use digital mode to make the payment. So that reduces time. And the third resilience I feel is the upgrading the customer, giving him knowledge of various business opportunity, and keep him abreast of the new development in the business and scope, because India is going to become a logistical hub for the Asia or maybe to the world, and giving him adequate knowledge on these kind of development that's happening is very important for us. So we keep having engagement with the customer on the new development that are coming, including the electric vehicle or the option of CNG. What is going to be the future for them when the vehicle, the kind of equipment or machinery they're operating is going to change? How to build a sustainable model?
Absolutely. Rajat, I'm going to give you the final say before we close. What we've heard from both Mr. Heber as well as Mr. Revankar, specifically as far as this sector is concerned, what you believe would be the order of the day to build in more resilience, to try and achieve the kind of growth targets that they've spoken of?
Shri, before I say that, I must say that I must express that this whole sector, not just microfinance, but what Sriram does as well, is truly inspiring, and the role that they've played in the development of the country and in social development is not should not be. It is to be much appreciated, and it's really inspiring. To your question, Shireen, I would say I think of the three fundamental things that the sector should focus on, is focusing on. This is something that I've heard several times from both these gentlemen. I think the focus on skill creation, on revenue creation as opposed to expense. Expensing out loans is a fundamental aspect of such lending, and that must continue, because that will maintain the strength of the sector, the resilience of the credit profile, because the income stream depends on it. The one point which is often not very clear to outsiders of the industry, but something that I've learned from these gentlemen, is the loyalty of the customers, the touch and feel. It seems that this is a very large mass of customers who you don't know, but that's not the case actually in the models of both of these companies. I'm well aware of the touch that is there at the last mile, the like in Sriram's case, the inspection of the vehicle, and all of those things really go down. The repeat customers that keep coming back and the loyalty, that's really what drives the resilience during tough times. We've been tested 3 or 4 times in the last decade, and in each test the sectors have come out very well. And true to my trade, I can't not talk about capital. I think that's the third part of the resiliency. It's been spoken, whether it's the diversification of liquidity. It's really important, and the companies do realize this, to diversify, to have different pools of capital, and to have pools of capital which are stable and longer term, and you cannot overemphasize the importance of that.
Well, yes, I would imagine that is an important aspect that these gentlemen, as well as this sector, will have to consider as they try and achieve and realize the growth aspirations that they've set out. But Mr. Heber, Mr. Revankar, and Rajat, many thanks for joining us here on The Making to take us through where the microfinance sector in India is currently poised, and more importantly, the kind of growth that it can achieve going forward. Appreciate your time. We wish you the very best of luck. That's it then on this edition of The Making. From all of us here at CNBC TV 18, many thanks for watching.